Hello, my friends. It's Robert Miner with Dynamic Traders Group, doing a short video for our YouTube followers and X or Twitter followers. I do these every few weeks, not too often anymore, but I think we're at a very critical time and you're going to find some good information I'm going to give you today. Very practical technical analysis and trade strategies, so pay attention. We're going to cover the three markets that we often cover in these videos: gold, Bitcoin, and the S&P. They're all three at some interesting positions that you might want to be aware of. I do want to mention that we do have, for the only time this year, we have a trial subscription to our DT reports available for half price. So if you'd like to check it out, if you like what you learn in these videos, check us out at dynamictraders.com. I'll mention it again later on. But for $49, you get a full 3 months access to all the special reports, that sort of thing. That said, let's get started and let's take a look at gold. I just yesterday uploaded the newest big picture report for gold for our subscribers, and that really takes a look at gold all the way back to the 1970s, right up to date, its trend position and pattern position. But we'll just take a quick look at what the immediate position is, more likely anyway, for gold. This is the weekly gold data. And more than likely, about 4 weeks ago, gold made a top that's going to last, if not several more weeks, maybe even several more months. The big picture, though, is that any decline in gold, even if it were to last a few months, would be a correction in a higher time frame trend that is not yet complete. So we're looking at gold as probably sideways to down, the immediate trend, for another 2 to 3 weeks before a weekly low is made. Now, a weekly low is not necessarily a major low. It's just a low that lasts for 3 to 5 weeks. But we always look for weekly trends. Those are the best tradable trends in gold. As I mentioned in our big picture report to subscribers, is that it depends on your time frame, of course, what your trading strategy is. But if you don't mind a 15, 20, 25% decline in gold, if you're a big picture in trader or whatever, is that don't worry about any declines, because we're probably going to have somewhere around 15, 20% correction right around now, if not soon. And but that will be a correction within the major bull trend that has much further to go, well into 2026, I believe. But for right now, probably sideways to down for a few weeks. We've had just a almost ideal completed pattern going into the October high. October is a high probability month for reversals for gold, and our dual time frame momentum, our dual look back momentum cycle, made a bear reversal a couple of weeks ago, and it's not oversold yet. Probably be sideways to down for another 2 to 3 weeks in gold. Here's the gold daily data. It's the December contract. And as we were looking for over in our regular reports over the last week or so, is this advance off of the late October low should be a correction. Going into just this past Thursday's high, is that it was probably in a position to complete an ABC correction, and it would need this close below this October 31st high to confirm that ABC correction is complete. It hasn't made that yet. It may not make it at all. What we do when we have practical trade strategies is we identify the probable position of a market and then what it can do to confirm or invalidate that position. So if gold were to close below this October 31st high, is that they would confirm that this should be a ABC correction and the weekly bearish trend will continue as anticipated. However, we can bring our reversal down really close to the market now, just to the close last Wednesday. That's why I have it in green. If gold were to close above that, then we'd have to reevaluate. Is that more than likely it's not going to continue lower as anticipated? So You can also use this as a trade strategies. A close below this level is a go short or a bearish trade strategy. Use that information as you will. Our daily momentums just made a dual look back bear reversal on Friday. So we've got our momentum cycles, we've got our pattern position. We had a timing set for last Thursday. That was the low to low high in timing. That's one of the most critical time factors to identify the maximum time for a reversal. And boy, right on that day was the top, at least so far. So that's what we're looking at. The immediate position of gold is probably sideways to down for 2 to 3 weeks. And that could extend into a few months, keeping in mind however long this sideways to down correction is, it should be a correction, and eventually gold should then continue the bull trend, probably significantly higher. So this is the SPX weekly chart. And last week was an inside week. That's what I call weeks of indecision, particularly because it closed basically flat on the week. It closed, just a point or two above the close of the prior week. So it's a week of indecision. And the next week, I think a decision will be made on the trend position. More than likely, that decision is going to be made to the downside. We had a bearish divergence on the price momentum cycles. We had our 8 look back momentum made a bear reversal, 1321 already bearish. That makes it triple look back bearish, a very unique position. And it signals that at least more than likely, we never know what's going to happen, but more than likely is the outcome from this last week's inside week is going to be to the downside and probably continue net lower for at least a couple of weeks. And again, any decline off this high is likely to be a correction. The final top is probably not in. I've begun doing a recession series of reports to prepare people for the final top, our subscribers for the final top, and the next serious bear market. It's probably not here yet, coming up before too long. So we're looking at probably sideways to down for 2 to 3 weeks. And here's our daily data. This is the December contract. It's only the last several weeks from this October low. Now, pattern-wise, it's hard to make much out of this. What we can say is that the daily momentum cycles are bearish. That's one technical thing. It's pretty reliable, but not 100%. But we really don't have a pattern position to help us out when we look at the daily data. But if we look at the 240-minute data, and that's what this is the ES December contract, 240-minute data from the October 30th high. So here's what I want to point out to you. Beautiful 5-wave decline into the November 7th low. We made note of that with our subscribers, and that the low that was made on the 7th was right near a significant target zone for that low, the 162% external retracement of that wave 4. That's usually the extreme for a wave 5. Pushed beyond it a little bit and then reacted up strongly. So this is, I've got my cursor on last Wednesday when I did the update for our subscribers, and I said because this was a 5-wave decline, more than likely the higher time frame trend is bearish, as the weekly momentum cycle is indicated, and that as of Wednesday, the ES was near the maximum time and price if it was making a corrective rally. That's because it was around the 78.6% retracement and the 60 price retracement and about the 62% time retracement. So I said, if the higher time frame weekly turn is bearish as anticipated, is that as of the end of the day today, that would be last Wednesday, the S&P was near the maximum of where it should be if it's making a minor correction, and it should soon resume the bear trend, eventually to a new low below the November low. Well, the next day, big sharp decline. And on Friday, the low was made. And again, look at this. This is like textbook stuff. 1, 2, 3, 4, 5. Then a sharp bounce back up with the close right about flat for the day. So again, 5-wave decline indicates that the higher time frame trend is bearish and that the advance off of Friday's low should be a minor correction, should be complete if it is a correction early this coming week, followed by a resumption of the bear trend to a new low, that weekly bear trend. I'm going back to the daily data here, and boy, that's the technicals, let's say, are overwhelmingly indicating that the bear trend is going to continue early next week. Could be wrong, though. And so we have a stop and any bearish or short positions on a close above Wednesday's close. Because if the trend is bearish as anticipated, then the ES should not make a close above that level. That would void our bearish outlook. And of course, we'd want to get out of any short or bearish positions that we had, whether they have to be futures or ETFs or, whatever vehicle we're using. So that's how we're looking at the ES over the next few days. So before we go on, just one more plug for the first time this year and the only time this year discount on our DT reports. They come out twice a week. Very comprehensive videos, trade strategies, cover all the major financial markets, and as well as our big picture reports, which we do every couple of months. And I just did a comprehensive 18-year real estate cycle report. I haven't seen anything in the approach taken to it, as you'll see in this report. And then I'm doing now in the midst of a recession series of reports, because I think we have a very significant recession that's likely to begin sometime in 2026. We'll narrow down that time range. If you happen to take this 3-month trial subscription, you'll be prepared. So you might want to consider that. DynamicTraders.com, hit the DT Reports tab. And this discount's only good until Sunday, November 23rd. I extended it because I had not gotten this video out in time. So check it out. You got a week. I hope you'll join us. It's going to be an incredible next few months in the financial markets. Okay, let's take a look at Bitcoin. So this is a Bitcoin weekly data. It just goes back about a year to the 2024 low. We want to look at the immediate position of Bitcoin because I think there's a trade coming up next week. So this is the weekly data. Bitcoin's been down for the past several weeks as anticipated in our report. By the way, this high is probably a high that's going to last for over a year. So we've done big picture reports for our subscribers. They've been prepared for that. They know the data. There's no secret forecasting I do. I give all the data, how I arrive at these probable positions and projections for the market. But it has to do with the halving cycle. Well, if you subscribe, you'll get all the details. But Bitcoin is probably within a week of making a weekly low. And anytime a market's in a position to make a weekly reversal, that's probably going to be a good trade setup. So Bitcoin's been down for about 6 weeks. Let's start at the bottom here. Our weekly momentum cycles are dual look back oversold. When they get in that position, it's at least a wake-up call that a weekly low is very near. And here's all some significant time factors. I'm not going to go through all of them, but they all fall within a 2-week period. This past week, the week ending November 14th, and next week, the week ending November 21st. So the week ending November 21st is probably the maximum time for Bitcoin to complete a weekly low. If it were to decline after next week, then something else is going on and something else really bearish. But more than likely, it's going to make that low by next week. And so that's pretty interesting. That's a weekly low. It's coming down to just some basic and simple price retracements and price targets. We'll look at the daily data in a minute. We'll hone in on that. Let's just do that right now. That's our weekly data. Here's Bitcoin daily data. Now, this is just the daily closes. I a lot of times like to look just at the closes of a market, whether it's daily or weekly, takes the noise out. I get a good view of what the pattern probably is. Coming off of the October high, boy, this is textbook 5-wave decline. 1, 2, 3, 4, and a 5. And we've recognized this as it's been declining. as the momentum cycles were bearish, and now we got the momentum cycles do a look back oversold. We have a 5-wave impulse trend, and we have the daily momentums are just a fast line is oversold. That means within a couple of days, more than likely at least, Bitcoin would make a daily low, and any daily low while the higher time frame weekly momentums are oversold or bullish is a setup to consider a go long trade strategy. So here's the ideal target zone to complete that weekly low in Bitcoins. I'm going to round up, let's say 94,000 to 89,000. And we've had a target of around 95,000 for several weeks that it would probably reach. Well, here it is. It's coming right into that target zone. So we're really close to that. Now, those numbers, by the way, they're based on closing data. But as you can see, as of Friday, just a little bit above it. So what are we looking at for Bitcoin here? Probably a weekly low, probably going to be complete in the next week. We want to look for reversal signals and then confirmation signals, bullish confirmation signals, for a probable net bull market over the next 3 to 4 weeks or so. So pretty good trade setup with very minimal capital exposure. But more than likely, it's not going to continue to a new high. And that's something you want to keep in mind, because you don't want to have false expectations, or really just any expectations. You want to focus on identifying the trade opportunity, getting in the trade. Then the market will usually tell you what kind of trend that is, whether it's a corrective trend or an impulsive trend. And that'll help you to understand whether it has that potential for making a new high, or if the advance is just a correction, because of course there'll be different targets in time and price if it's just a corrective rally. But still, a weekly trend, a trend that lasts a few weeks, those are the money makers, aren't they? Okay. Well, my friends, that's it for today. Once again, check us out at dynamictraders.com if you're interested in our report, our big picture reports, 18-year cycle report, and our twice a week regular DT reports. Now's the time to check it out when it's half price, only until next Sunday, November 23rd. That's it for today, my friends. Everybody remember, stay healthy, have some fun, and keep your stops in the market. That's it. Take care. Robert Miner over and out for now.